Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. In today's video, we're going to be examining some information from Benjamin Cowen, who is a prominent cryptocurrency market analysis, renowned for quantitative analysis of digital assets. I've seen other clips from him and stuff like that. And the reason I want to bring this on is, like I told you guys, is that you always want to examine both sides of the coin. So as of right now, everything is looking super bullish with Bitcoin. We're off into the moon. Bitcoin, I think, touched 118, came back down a little bit now. But Benjamin is one of the few that I've seen putting some information out there about a pullback and potential bearishness. But I actually have, one, I want to say, listen to this kind of stuff and digest it. But two, I believe there's two major factors that people are not taking into effect. Now, by no means am I claiming to be smarter or have all the answers, but I find it fascinating when I digest stuff like this, that they leave out these two major factors that I'll bring up at the end of this clip. So let's listen to Benjamin real quick talk about his analysis and what to look for in this cycle.
Important moving average to track, because so long as Bitcoin holds it, you could argue the integrity of the market cycle remains intact. And if you zoom in to even the current market cycle, you can see that Bitcoin tested the 50-week SMA in March and April of this year. It also tested it in August and September of 2024. And it didn't quite test it, but it did stay above the 50-week moving average in August and September of 2023. So the 50-week moving average is an important one to track, because so far this cycle, it continues to hold as support. And this is one of the ones we looked at earlier this year when we were talking about that if Bitcoin can hold above the 2024 high and hold that 50-week SMA as support on the weekly time frame, then the next rally should be able to take us to new all-time highs, right? Like, it's a possibility. Whereas if we had gone below the 50-week SMA considerably or below the 2024 all-time high, there would have been a higher likelihood that the rally that we're in right now, or the one that we experienced a month or two ago, would not have taken us to all-time highs. Now, let me show you what I mean, right? So let's go back to 2013. Let's go back to 2013. And what you'll notice is that the 50-week SMA really didn't come into play back then until the cycle was over, right? So I actually kind of have a story about this and why last cycle was a lot harder, and how I adjusted this cycle with respect to the 50-week SMA. In 2013, once we got to the 50-week SMA at all, the cycle was over. And then you got confirmation basically on the first weekly close below the 50-week moving average, right? When Bitcoin got a weekly close below the 50-week moving average in 2014, it was confirmation that the cycle was in fact over. Again, if you wait for that, you're already essentially halfway through the bear market, right? I mean, back then, had you waited for a weekly close below the 50-week SMA, Bitcoin would have already been down 60% from the high. From there, it did still drop another 60 to 70%, but still, like, half the bear market was already over with. But what can we see from this? With a weekly close below the 50-week moving average, the cycle was over, right? Now look at the next cycle. In 2021, we also had, kind of this mess over here. But if you just simply look at the post-halving year and going into the midterm year, which is normally when we have our bear markets in crypto, look at this, look at the following cycle, right? So in 2017, you had a return to the 50-week moving average, and note that the entire cycle, basically, we stayed above it. We weren't even testing it. But once it was tested, that was the beginning of the end, right? And then just a couple months later, we got a weekly close below the 50-week SMA, and in fact, the cycle was over, okay? So you can see it play out twice. You can see it play out in 2013, 2014. You can also see it play out in 2017, 2018, okay? So a pretty clear indicator to follow. Now, what did we learn from the first two cycles that was actually going to get tested in the next cycle? What we could have said from the first two cycles was that when Bitcoin gets a weekly close below the 50-week moving average, the cycle's over, right? And that when it happens, the bear market is about halfway over as well, right? So again, by the time the close below the 50-week SMA occurs, it's almost an indicator that the bear market is already halfway over.
So to summarize, basically what he's saying that you should be on the lookout for is Bitcoin, if it continues to test the 50-week SMA, like he was talking about before, coming down and actually touching it and then bouncing off, then that in TA terms weakens that support. And then, like he showed in previous cycles, Whenever you had a weekly close below that, then the bear market was, in effect. So I'm gonna go to one other clip from him.
My view is basically that if 2024 held, if the high from 2024 held as support in the pullback, then Bitcoin could go to all-time highs again. And we held at like 70, we went to like 74K, the high from 2024 was like 73.8. So we have gone to new all-time highs. We have not seen total market cap follow that though. Yeah, total market cap is still at a lower high. So we are seeing some divergences there. We really would like to see confirmation of that. I think that we're likely going to see a pullback in the third quarter. We also saw a similar pattern in 2023 and in 2024 and in 2022. It just seems to be a common thing. Obviously, I could be wrong, right? Like there's always a chance we just go up into Q3. But one of the reasons I think there'll be a pullback is if you look at some of the macro data, initial claims tend to go up around the summertime. They went up in the last couple of years. So I think you'll probably see initial claims start to tick a little bit higher. That could pose some uncertainty. I don't really think initial claims are an issue until they're printing 300.
Bitcoin might be sore.
So he's saying, again, seeing a pullback potentially in Q3. So the big kind of disclaimer that I have, or that I find fascinating, that doesn't get talked about much. So like I said, there's two of them. I'll give you a bonus. It's three. One, the big thing, first and foremost, is that this is all for traders. If you're just buying and holding Bitcoin, none of this matters. So if you're a hodler and you have adopted Ralph Powell's 80-20 rule, you don't need to even care about all this other technical analysis jargon, because you're looking at storing your wealth in Bitcoin. You're not trying to get in and out of the charts. And that is by far the safest and easiest thing for people to do, in my humble opinion. That's definitely what I'm doing. So I'm not trying to time the market, buy and sell out and buy back in. My thing is just dollar cost average every day. So kind of like Michael Saylor said, he's gonna be buying when Bitcoin's 100,000, buying when it's 1 million, buying it when it's 100 million. Just keep buying it. Don't worry about anything else. Now, with your alts, you want to look at some of that information so you can take profits and sell the alts, roll into Bitcoin. Okay, sure. So that's big disclaimer number one. All this stuff is just noise if you're just hodling Bitcoin. Number two, I find it fascinating that they give all this data and they're always historically looking back at the charts, which have some validity. However, it's fascinating that no one says that things have changed. We know fundamentally Bitcoin now is a globally accepted and regulatorily approved asset, at least from the US standpoint. That has never happened in previous cycles. Add on top of that, its maturity, not only maturity in the time that it's been around, and not only maturity in the sense that now that there is regulation, but maturity in the asset class, the actual total value, an amount within the market. So like Cowen said, he's like, we haven't seen higher highs in the total market cap yet, but how can you evaluate Bitcoin going forward off of the way it used to be when it has fundamentally changed? Like, again, I'm not claiming to be a technical analysis or looking at historic data or anything like that, but I just find it hard to wrap my head around looking at it and saying, oh, it's going to be the same as last time because all these other cycles did X, Y, Z. All the other cycles were retail. All the other cycles were a $1 million market cap. All the other cycles didn't have regulatory approval. They didn't have strategic stockpiles and Bitcoin reserves and nation states and BlackRock and companies. Like, if you're just going to ignore that and say it's just going to follow the same thing, like, it just doesn't make any logical sense to me. So that's kind of where I draw the line, this stuff. So like I said, you always want to digest other sides of the coin just so you can know what's going on. In the zoomed out long enough time horizon, we know the Bitcoin's going up. That's all that really matters. But if you're in the short term, you're looking to trade, looking to take your profits, or, trying to make a big buy order, something like that, then you definitely want to see what other people are saying, because we don't know what Bitcoin's going to do in the short term for sure. And I am not saying that we're not going to have any pullbacks, but factoring in the maturity and the changes and all that stuff like that, it's like, to me, it's hard to see that we would have the same drawdown, same pullbacks that we've seen previously. I know that we still have traditional market sentiment that will affect the charts, your basic fear and greed index. This here, people, psychological barriers of selling at 150K or 200K or 125, like these numbers that people will just want to put in buy and sell orders at. Of course, that's going to affect the market. But again, when you're looking at your BlackRocks and strategic Bitcoin reserves and all that. These are people and entities that are buying and holding Bitcoin. Michael Saylor, the new treasury companies, they're using that as a yield-bearing vehicle. It's like, I'm going to stack Bitcoin, then based off of the appreciation of Bitcoin, I'm going to leverage my company's stocks to sell at the market prices or different coupons, whatever, and then buy more Bitcoin. Well, they're not selling that. And especially in the regards of what Saylor's doing, none of that gets called. So these are people, and we don't know if it's any paper Bitcoin or not, but in theory, these are people that are taking Bitcoin off the market and not selling it back. So again, how can you evaluate this asset class the exact same way it's always been? As they say, history doesn't repeat, but it rhymes. So of course you need to look at that stuff, but I don't know. To me, it's just too many unknowns to be trying to hedge my bets on that. So the easiest, safest for me, TLDR, dollar cost average, every day, every week, once a month, whatever your budget will allow, and just stay humble, stack sats, and not worry about anything else. Evaluate your portfolio in Bitcoin terms. Do you have more sats today than you had yesterday, last week, a month, or a year ago? If you do, you're winning. If you don't, you're losing and you're doing something wrong. All right, that's all I got. Smash that HBO special, help a brother out. Like, subscribe, comment down below. And until next time, lift daily and achieve your impossible. See ya.